Welcome, everybody. Over the past month, I've spoken to hundreds of homeowners on the south and west sides who are shocked and upset by the property tax bills they received this year, and I'm as upset and angry as they are. The record increases that we saw in Chicago's poorest neighborhoods are part of a regular pattern by the commissioners at the Cook County Board of Review. When they hand out tax breaks for large commercial properties, it shifts the burden onto residents. It helps the very wealthy and big corporations, and it harms Black and Latino neighborhoods and really all homeowners in Chicago. And don't take my word for it. Treasurer Pappas issued a report earlier this year that showed how our rigged appeal system has shifted billions of dollars in property taxes onto homeowners in recent years. And this year, it's $500 million shifted onto Chicago homeowners alone. And that's an outrage, and it's basically a formality at this point. If a commercial property is worth more than $5 million, there's a 90% chance that it'll get a reduction at the board review commissioners, and often that reduction is substantial. And studies have showed that after these cuts, these big commercial properties are assessed at only 75 to 80% of their real value. And we pulled together some examples for you today. You can see data centers. And this is apartments right here. And you can see data centers here where we're seeing huge cuts of 20, 30, 35% from the Board Review Commissioners in the appeals process. And the same goes for hotels like the Hilton Towers on Michigan Avenue. You can't tell me that these hotels are worth less than they were before the pandemic when they were in 2021, the last time we reassessed them. They're getting revenues per available room that are higher today than before the pandemic, and yet their bills came down by millions of dollars. Again, with every one of these unfair reductions, the Board of Review Commissioners shifts the property tax burden onto homeowners across the county, and especially in Black and Latino neighborhoods. Because of rising home prices in many of the city's more affordable communities, homeowners are hit the hardest there. And these cuts by the Board of Review Commissioners added $700 to the average Chicago homeowner's tax bill in Chicago, tacking on to their bill. And that means that 2/3 of Black and Latino neighborhoods on the south and west sides would have seen their bills decrease or remain flat if not for these large commercial cuts. That's a fact. In Englewood, the entirety of that tax bill increase would have been wiped out if the Board of Review's burden shifting hadn't taken place. For many other neighborhoods, the burden shift accounts for the majority of the tax bill increase. South Lawndale, Little Village, saw the typical residential tax bill increase by $850. That increase would have been closer to $150 without these Board of Review Commissioners' cuts and handouts. My team and I have been out in these communities every day to help people. As I speak, the outreach team is out in Little Village at the 23rd event that we've had since tax bills dropped to help people get their missing exemptions. We visited churches, community centers, schools, block clubs. Tonight, we're going to be at the Garfield Park Fieldhouse to help homeowners in Garfield Park and North Lawndale. And everywhere we go, we tell people the same thing. First, check your exemptions. Look on the bottom left-hand side of that tax bill. If you're missing exemptions, these valuable savings on your tax bill you can go online or visit our office until this coming Monday, December 15th, to get an adjusted tax bill that's lower that includes your exemptions. We've already helped dozens of people missing the senior freeze and other exemptions. The event that we had in New Mount Pilgrim on the west side just the other night, we helped dozens of people on these very issues. Next, we asked them to make sure that their property tax characteristics are correct. We've been sending our valuations analysts out to many of these events where they review the bills and assessment notices to make sure nothing is off. And they're trained to look for areas where we can help people if we've missed something. If something looks wrong, we'll take a closer look. We'll gather more evidence and figure out if the assessment needs to be corrected. That means looking into flood damage, other structural defects, square footage, information that's incorrect, being responsive to each homeowner's individual situation. But we know that many taxpayers already have all their exemptions. and have appealed. To help these people, we need to push for reforms that go deeper. We've already done that this year. During the fall veto session in the Illinois General Assembly, we successfully teamed up with dozens of community organizations and advocates, like Princess Shaw at Light Up Lawndale, to get an increase in the senior freeze income threshold passed. We got that done. That's going to help tens of thousands of vulnerable low-income senior homeowners from being harmed by large tax bill spikes. And what we need now is a way to protect other homeowners against these same tax bill spikes. When the Board of Review Commissioners' commercial cuts and handouts saddle the typical homeowner with hundreds more in property taxes, that's unfair. And that's why I've been advocating for a circuit breaker legislation in Springfield. This would protect homeowners against property tax spikes like we're seeing now. And here's how it works. If your tax bill jumps by 25% or more from one year to the next, the state issues you a credit to bring it down, and you get it for several years. Other states already do this as a cornerstone of their property tax system to prevent longtime residents from being forced out of their homes. 29 states plus the District of Columbia have this as part of their property tax systems. And we deserve it here too. We need to protect homeowners who are getting hammered by the board review, and we need it now. So I'll do Q&A after, but first I'd like to introduce Princess Shaw of Light Up Lawndale.
Taller than me, sorry. Good morning, everyone. My name is Princess, Princess. Last name is Shaw, Shaw, and I'm the executive director and owner of Light Up Lawndale. Light Up Lawndale is a community grassroots organization that's been boots on the ground for the last 8 to 9 years. We're just doing advocacy and assisting those in the community that do not understand the rhetoric that comes with all of these policies, rules, and regulations, and procedures and ordinances that are put in place. So what we do is basically just break down all the municipal codes very, very simply so the community can understand what it is that they need to understand and be able to take that information, valuable information back and be able to process it. I just want to thank the Cook County Assessor, Mr. Kaegi here, for listening. I think a lot of times what we have a concern with in our communities on the west side and the south sides is that we have a lot of elected officials that think they know the answer, and they are actually working on a system from 1950. And so I just want to applaud you and thank you a lot, because the bill that he just informed you about is going to be very, very instrumental to helping our seniors. Where we were doing our surveys out, when we were doing our surveys, we would notice that a lot of seniors that have mortgages were double paying their taxes, and then they were not aware of the actual exemptions that they were supposed to have. So those were two really big barriers, and then a lot of them ended up getting money back. And so since working with the assessor's office for the last 2 years, we've been able to get right at about $1.5 million back for the actual community, based upon them actually understanding what it is that their tax bills were, working very closely with the assessor's office to be able to get that done. But there's still more work that needs to be done. That work, as exactly Mr. Kaegi is alluding to, we need to do more. These rules and regulations, policies and procedures have been well overdue, and they need to be done and upgraded immediately, as he's stating. You'll have someone that has a property that they'll move on the block. They're actually dropping new tiny homes, or even these cookie cutter homes that they're putting together that's worth $1 million. And you have someone that lived on the block since 1920, and their house has none of those amenities that they do in that new home. So I just implore any and all elected officials, let's all actually have all hands on deck, sit down, let's have a conversation versus being adversarial, because that does not help us. And at the end of the day, our taxes pay for a lot of things. Thank you.
The next speaker, we have Nidra Sims-Spears of the Greater Chatham Initiative.
Hi, I'm Nidra Sims-Fears, the Executive Director of the Greater Chatham Initiative. We serve 4 Southside communities. We have a great working relationship with Assessor Kaegi and his office, helping to educate our residents and our business owners about property taxes. And we are, we're thrilled that property values have gone up on the South Side, but we are not thrilled that we are losing the good fight over the increase in property taxes when that burden is being shifted to residents and business owners. We know that business owners are buying more properties along the corridors, and that's a good thing because we want to keep intergenerational wealth into the community, but tax burdens really can harmfully impact that intergenerational wealth. We see where people lose properties for not being able to pay $2,000 or $3,000 or $4,000 in real estate taxes. And so the circuit breaker bill that Assessor Kaegi's office is promoting is really very important so that we can safeguard these property tax hikes so that people can stay in their home and their businesses and keep real estate taxes affordable. Thank you.
And now I'd like to introduce Mark Wallace, the Executive Director of 10 by 10 to Win.
Good morning. I've been a resident of Chicago for 40 years, and I'm also working in the real estate industry. And for far too long, these systems and these offices have been politicized based on establishment politics. And I think that it is important that the people who are serving as our public representatives work on behalf of effective public policy rather than looking for personal preferences of personalities to serve in positions that the residents and the taxpayers end up bearing the costs. It is unconscionable that homeowners, especially retired homeowners who are on fixed incomes, subsidize real estate property taxes for wealthy property owners downtown who can afford to pay their fair share. This is a system that needs to be fixed, and we have to work collectively in order to repair this, as opposed to being establishment politicians or someone not wanting to support somebody because they don't represent their establishment. They represent the public and they represent the people, and these are the things that we need to address. Fritz Kaegi has been addressing that. I've been working with Fritz since he's been in office for far too long. This office, as well as the Board of Review, has been politicized for personal preferences rather than having effective public policy, and that's what we should be working towards. Thank you.
All right, and next I'd like to introduce Kelwin Harris. He is our Chief Civic Engagement Officer here at the Cook County Assessor's Office.
Thank you. My name is Kelwin Harris. I lead civic engagement for the Cook County Assessor's Office. I want to talk to you how important outreach and community engagement is to Assessor Kaegi and to our office. And what does it really mean? It means listening to residents. I'm so heartened, listening to these community leaders talk and give testimony about our partnerships and the work that we do together. It means a mixture of using data and heart when we go into communities and understanding what resources need to be delivered there. Over the past few years, we've expanded this outreach team to include full-time staff that also focuses on small businesses, multifamily, and the preservation of affordable housing to stimulate economic development. Over the past month, with the issuance of property tax bills, as Assessor Kaegi said, we've collaborated with numerous community groups, clergy, and elected officials on the south and west side, almost day and night. As the assessor says, we're somewhere right now, we'll be somewhere this evening. In a recent event in North Lawndale, as Assessor Kaegi mentioned, netted numerous senior freezes, saving residents hundreds of dollars. And that's what we find when we go out into communities. A lot of people, they don't understand that they need to apply for senior freeze. They look at their bill and they get shocked, and they don't have their exemptions. They don't have the basics and the fundamentals. So we are tireless at doing outreach. Over the past week, we've been embedded in North Lawndale. We were at the Kroc Center just last night in West Pullman, Garfield Park this evening, tomorrow at Kennedy King College in Inglewood. And I just implore any other community partners that don't know that we have outreach in the assessor's office. We have a team that does this full time. So, we are looking to find you, but please reach out to us if you know people. People like Princess are a great example of someone who takes it upon themselves in their communities to organize people and to seek out their neighbors. You can look up a property tax bill of anybody, right, on your block. People like her actually go out and they do that, and they say, hey, Ms. Thomas, I noticed you don't have your senior freeze. So partner with us. We're eager to find you, and we're eager to work together. Also have the privilege of introducing someone else on my team, Lupe Marine, who is boots on the ground. She leads our outreach team as they go out into the community. She's going to talk to you about some of the numbers and how the outreach that we do, not just during second installment tax bill, but throughout the year. Lupe?
Thank you. My name is Lupe Marin. I am the Director of Outreach and Engagement for residential homeowners. Our team is a very small but mighty team. We travel all of the county. And to date, we have attended 235 events across Cook County, with 74 of those being bilingual events. Just this month, we attended 19 events, which focused on neighborhoods with the highest assessments. When we attend these events, we go in with one full purpose, and that is to assist homeowners. We ensure that homeowners, especially seniors, veterans, and persons with disabilities, have their exemptions in place on their second installments. We may not be able to resolve all issues in the moment, but we make sure that each homeowner is heard and leaves understanding their assessments. So whether it is helping them apply for missing exemptions, helping them apply for an appeal, we want to ensure that every homeowner is receiving that assistance. I am very proud of the work that our team has done, and that we have built this community and this trust within these communities to continue to serve the county.
All right, thank you to all of our speakers, and we'll have Assessor Fritz Kaegi come up and take Q&A.
Okay, thanks everybody for being here. I'm ready for your questions.
Hi, so let's say March comes, spring comes, next bill comes, there's no movement in Springfield, what happens?
So first of all, we have gotten things passed like automatic renewal for the exemption for people with disabilities, for veterans with disabilities, getting the threshold for the senior freeze raised, because we're a constant presence there. We keep pushing. We know a lot of work gets done at the end of the spring session, and we are a constant presence there. So the key thing for getting things done is to never let up. So that's the first thing. Like what you need from the assessor's office is you need a fighter who is fighting for average taxpayers and who doesn't just spend a week or two on this, but through persistent effort. We've been focused, for example, on the circuit breaker since 2024. We met with our peers around the country to find the best ways for these systems to work. The last December, we had people come on board like the South Suburban Mayors and Managers, the Southland Regional Mayoral Black Caucus backing the circuit breaker. Last May, we had an editorial co-written by me and mayors of the communities who have the very highest tax rates on the west suburbs and south suburbs. The key is for us to all be pushing. And what I think is going to be happening from the events that we've had just in the last few days, we're going to have a lot more people there with us advocating for the circuit breaker. I'll give you an example. In the last tax cycle, tax bills went up a lot in Pilsen. And that our work with community groups in Pilsen has helped to have them engaged on circuit breakers. So that's just an example of how we'll keep going. In the meantime, 1 out of 3 homeowners doesn't have the homeowners exemption. So at our events, we're seeing so many people who don't have their exemptions, and actually more than 1 out of 3 of our attendees at the events that we've been going to hasn't had them. And so this is really a great opportunity to get people signed up for those. Each homeowner's exemption saves you about $600 off your bill. So in a lot of communities where you don't have an exemption, that's going to reduce the majority of your tax bill. For example, if you live in Austin, the typical bill went up about $600, $700, but a lot of people haven't had exemptions there. Well, that can offset it. Same thing in Inglewood. So exemptions are an important part of it, and of course, we'll work through the normal course on certificates of error on valuation side. So we have many different tools. We have the tools that are available at our office right now, exemptions and certificates of error, but what do we do about the burden shift at the Board of Review that's costing each and every homeowner in Chicago an additional $700 on their property tax bill? Fortunately, we have a roadmap, a working group from the county that did a study last year on commercial assessments and found what we talked about in my opening statement. It showed that the Board of Review in most years has been 25% too low on commercial assessments, shifting hundreds of millions of dollars on other taxpayers every year. And the President Preckwinkle is committed to annually measure these values so that we're getting commercial values closer to market values, and they're not being cut so much on appeal at the Board of Review. And there's more than a dozen recommendations of follow-through, where there's a work stream for each one of those, where we're working with the Civic Consulting Alliance to drive that through. So there's a lot of things going on at the same time. We're using pressure on the Board of Review so that these cuts don't continue to be made at the scale that they've been making. And we can do that through the work stream and the recommendations of the roadmap. And then we have through the normal course of business, getting people their exemptions and working with appeals and certificates of error. Of course, there are many other things that need to be fixed in our property tax system too.
Will you be looking for further postponement of the tax sale?
So the treasurer is the one that is sort of the leader on that. We did in the veto session have the first installment deadline was postponed to April 1st. And if there's any necessary change further on, we'll work collaboratively as a county to push on that too.
The Board of Review argues that the commercial values have gone down because commercial real estate has gone down. I mean, there's a lot of buildings that are empty. There's, you could look at Water Tower Place. I mean, you could look at a lot of places. So, last week Larry Rogers said he's flying the plane while he's fixing the plane, and that's the problem. When you do that, it crashes. So they blame you for not assessing these properties correctly, residential properties correctly. So, I mean, you will acknowledge that commercial properties have gone down.
Well, I think we have acknowledged that, but what I think we should also acknowledge is the county actually measured this, right? It's no longer a debate. What the county did is they hired national experts, and they looked at the 3 years after the pandemic, because every sale of a commercial property is like a test. Because you look at the amount that the commercial property was sold for, and you compare it to where did the assessor's office say that was worth, and what did the Board of Review say it was worth. So in these 3 years after the pandemic, there were 1,000 transactions that this study looked at. It was a landmark. It's the most comprehensive review. What did they find? Board of Review down 25%, 24% too low. This is after the pandemic, right? That is the kind of value reduction we saw again this time. Let's look at the hotels. The last time the hotels were reassessed in 2021. And now in the reassessment in 2024, our values were cut by 35% or more for hotels. And as a result, very famous hotels whose names begin with an H have bills that are down by millions of dollars. You can't tell me that our hotels are doing worse now than they were in 2021 when they were empty, when the revenue per available room is higher than it was before the pandemic. This is not a debate anymore. This is a fact that these numbers are coming down too much. Let's look at the data center example right here. Data centers are not only doing work from home and cloud-based services, they also are being driven by AI. Data centers across the country are booming today, and this is the biggest data center in the South Township Look how much its value was cut. Its tax bill was down by millions of dollars. It's owned by a $50 billion corporation. That's who our communities are paying for. And our assessments took into account all the huge effects on office properties. That's not the point. Office is only 15% of our property tax base. There's much more going on with commercial being downtown and getting handouts than office. And by the way, some of the office buildings are still doing well. Take a look at the Willis Tower, owned by the biggest private equity company in the world. They're not having a problem with occupancy, yet their bill also fell by millions of dollars. So that's not right.
We've commented about how this isn't a political issue, how we don't want debates to still be happening between these respective parties. Do you have a timeline or a plan in place for kind of getting discussions going, talks going in a more like neutral zone for citizens that are being nailed by this?
Well, first of all, it's important that people know. So we're always going to talk about the facts of the shift. The shift is not a debate. It is a factual matter. In our annual report, we note that the Cook County Board of Review is changing our property tax base by 60 times as a percentage of the property tax base. A typical Board of Review in our state, 13 times what a typical Board of Review does in the collar counties. That's a fact. That's not a debate. And so it needs to be known. But what we do welcome is that roadmap that was created by us collectively, the assessor's office, the board of review, the clerk, the treasurer, and President Preckwinkle, and that roadmap comes with more than a dozen recommendations so that commercial assessments won't be cut so much on appeal at the board review, and so there'll be more accuracy. We embrace those recommendations 100% and are acting on those recommendations. We meet weekly on the implementation of them. We put forward advanced several of those recommendations ourselves and check those off. And the board review is working with us on engaging on those. And I'd say it's still too early to say about where they are on it, but we are ready to work on the basis of those recommendations. And if you want to strip personality out of it, I think that's a great way to do it. Here are recommendations from national experts embraced by our county president that we all collectively supported this study. Let's just advance those recommendations. And by the way, let's also act on the Inspector General's recommendation that the board review follow our policy of not taking campaign contributions from property tax appeals lawyers. They wrote years ago that is a critical vulnerability to our system that diminishes the repute of that office. We put into place that policy the first day I was here, and it's been embraced by the public as reducing the potential for conflict and the perceived conflict. And we think everyone should embrace that policy.
What do you say for Commissioner Rogers, who has said you've overassessed and you can bring it down? You've done it in the past in the northern suburbs, he says. What do you say to that?
Well, what I'd say is, first of all, look at the studies that have come out. They show that our residential assessments, if anything, might be too low. So you can go look at the University of Chicago study that came out looking at the last 6 years. It showed that our assessments were within industry standards, that we, for the bottom 70% of homeowners, took almost $2 billion of property tax burden off of them. And what I'd say is that, the past examples that I've seen, Commissioners Rogers, those are not certificate of errors. Those are part of the normal process of reassessment before bills came out. It's a big difference. And so we will act on certificates of error, if we're finding a situation where we didn't have all the information, just as we always will. What I'd return the puck to Commissioner Rogers is say, why are you cutting the value on data centers that are booming, and why are their tax bills lower by millions of dollars? What about these apartment buildings where record low occupancy, or record low vacancy, and yet their bills are, this is down by 32%. What about the hotels? They were reassessed in 2021, and yet their value's down and their bills lower. That's, and by the way, this is not just an opinion anymore. The study that I mentioned looked back the last 3 years, looked at over 1,000 transactions, and shows that the board review is coming in too low. So our residential assessments were very transparent, and we show how we've arrived at them, and we show the tests that we've done on them, and there are third-party studies that are also showing our assessments are dramatically fairer than they used to be, and are in line. We always will act if we don't have enough information, if we didn't have enough information on someone's assessment. But I think the thing you have to remember is that if I were to take one unilateral act on one neighborhood, it shifts the burden on others. You know, there's some black neighborhoods on the south side where bills did fall this year despite the burden being passed on to them. And that's because home values are not rising in some communities. In Auburn Gresham, in Chatham, in Burnside, in Calumet Heights, they haven't had the home appreciation that's being seen in other neighborhoods. It's not fair to push the burden onto them by a unilateral political act.
Are you 100% confident in the formula that you use to assess properties, or would you acknowledge it may need some changes or tweaks?
Well,
Maybe more accurately appropriate, or assess properties?
We've won national awards from the International Association of Assessing Officers for the improvements that we've made to residential assessments. The world's greatest expert on property taxes, Chris Berry at the University of Chicago at the Mansueto Institute, has shown how dramatically we improved residential assessments over the last 6 years. Go and read our annual report, and you can see the annual progress on it and see how we've resulted in eliminating most of the disparities that were there in residential assessments before. So we're really proud of that work, and you don't have to take our word for it. Look at very respected third parties like him for that. Does it mean we're perfect? Of course not. We walk humbly here and always recognize there are things we might not have known about a property before we sent out the assessment. And our analysts are all trained, and our customer service and taxpayer services and outreach staff, they're all trained to look for situations where we need to be listening and we need to take into account information that we didn't have before. For example, if someone had a cracked foundation or something going on inside their house that we didn't know about, that if we take that into account, it would result in a reduced valuation. That's a perfect example of what we need to be listening for and to have reflected in a certificate of error so that we get that value right. And we train our staff for that to listen. You know, we're doing more than one outreach event per business day in the last couple of years. And so we think we are reaching more people in those situations, too.
Are the buildings listed here the downtown buildings that benefited the most from these appeals?
Those are some examples, but there are more egregious examples. Our press staff will be able to share others with you. It's really an incredible litany. It's hundreds of buildings. As I mentioned, if your building's worth more than $5 million, there's a more than 90% chance that you get a reduction at the board review. Even though national experts that the county hired, that we all collectively engaged in the most landmark comprehensive study ever done, show that their values were coming in on average as low as 25% too low some years.
Can you speak to why those appeals are then dramatically impacting residential areas that
Sure.
shift?
Sure. So we have a zero-sum property tax system in Cook County. If you squeeze the balloon on one end by reducing one property's valuation and share, the rest of the balloon grows in the system. So think about it as a $9 billion dinner bill. There's about $9 billion of property taxes that are collected for all the different taxing bodies and TIFs in Chicago. And that number doesn't change regardless of whether assessments go up or down. So we're all sharing the dinner bill here in Chicago. Your assessed value as a share of all the assessed value in Chicago is your share of that $9 billion. So when these cuts are made on properties that are prospering, on big corporations, you know, $50 billion plus corporations which own this data center, or the world's biggest private equity company which owns the Willis Tower, or global champions in hotels, when their bills are lower, even though they're not reflecting the true value of them, it gets shifted onto homeowners, and that number can be named. It's $700 per homeowner in Chicago that's tacked onto their bill.
Does the circuit breaker bill change how that dinner bill is?
Yes, because it would. Because what the circuit breaker would do is if your bill rose 25% or more and you meet the income qualifications for the circuit breaker plan, which we would propose to be under $100,000. You get coverage for up to half of the increase in your bill for 3 years. And that program would cost a couple $100 million, and that would help people to absorb this shock. It helps the people who need it most in the most difficult situations, and not as a permanent place, but it gives you 3 years to adjust.
But that money doesn't go back and fall back onto the commercial properties. It comes out of the budget.
Right. It would have to be funded. It has to be funded by the state and county. 29 other states do this for their homeowners and taxpayers. And it's a cornerstone of their systems to help people in really vulnerable situations. We need to be doing the same thing here. I meet too many homeowners who are vulnerable because they've fallen off the senior freeze, or they're paying for a kid for college. They can't afford an unanticipated expense of $500, $1,000, $2,000.
Okay, but still more needs to be done to make sure they're paying their share.
That's absolutely right, which is why we push forward on the roadmap, why we call attention to this issue. It needs to be, you need the assessor to be calling attention to this. It can't continue to exist in silence.
The criticism that I've heard about the formula that you guys use is that you used to have boots on the ground, actually in people in neighborhoods, but now everything is done online. Can you address that? Because that is the one thing I have heard for the last 4 years from, various people out there. And
Well, I know some people will say that, but we have more boots on the ground than we've had since I came in here. When we came into this office, we had a touch more than 200 people in it. We now have a staffing level of about 300, and we are at record staffing levels for our field staff, which go out and inspect permits. And we supplement it with technology, so we have more technology coverage than ever. There is kind of a myth that one time the Cook County Assessor visited every single property in its interior, and that's never been done. And our other peers in the country also are not in the same position to do that. It would require about tripling our budget to send an inspector to every single property.
Does all of this get lost with homeowners, given the fact that you're running for re-election, and two of the Board of Review Commissioners are running for re-election? Do you think that people out there care about that, or do you think that because you guys are all running for re-election, that maybe no one trusts what everyone's saying here on both sides?
Well, I think you can look at the record. Go and look at our annual reports, which we've been publishing since 2019. We've been shining a light on it since then, year in, year out, showing the burden shift, highlighting it. We have a dashboard where you can see this. We have taken a leading role in shining a light on this thing which had been hidden before. And the public has always suspected that this system was rigged, right? It's no secret to people, and federal prosecutors disclosed that Michael Madigan was worth $40 million when he was sent to jail. Who made him rich? How did he get rich like that? People know. It was reductions for these big commercial properties. And I think it doesn't surprise them to know at all that the Board of Review Commissioners largely did that. And that there are giant conflicts of interest with lawyers. I think the public gets pelted with all this mail. Everyone has a story or a sense of how this system might have been rigged in its own way. And people really like, even if they don't understand the whole system, that we're focused on being transparent, that we send out mailers that use plain language, that what they want to know is that no one else is cheating the system, and they like the fact that we're cracking down on that for people who are skating by before through conflicts of interest and pay to play and other kinds of biases. So people really like that, even if they don't understand the rest of the property tax system. For some people, that's all they need to know. And we're proud to have been the office that sets the ethical standard by not taking campaign donations from property tax appeals lawyers. Always been a perennial problem here in Cook County. This is one of the only places in America that was like that. It really appalls people when they come from the rest of the country or even from other parts of the world to know that there are politicians that were out there calling up people at moonlighting as property tax appeals lawyers Some of us, might have gotten used to that because it's been done here so long, but it's really appalling to a lot of people, and it makes them mad. And so I think that is an important thing for people to know when these reductions are happening. I think people can understand very clearly. It's very easy to understand. A rigged system produced reductions that were not deserved for big property owners, and it shifted the burden to the tune of $700 on each and every homeowner in Chicago. And it really shocks them to know that, in more than 2/3 of our Black and Latino neighborhoods where bills went up, their bills would have been flat or down but for that shift. In Austin, the bill would have been flat rather than be up $700, $800. We mentioned the example of Englewood. And that's true of 2/3 of the Black and Latino neighborhoods in Chicago.